Hello again, everyone. And I'm joined right now by Sarah Schaefer, who is a tax counsel at the Senate Finance Committee. Very privileged to have her with us, someone who's very highly respected up on Capitol Hill. Sarah was, I believe, before she came to the Finance Committee, worked at one of the big four accounting firms. Is that right?
That's right.
Maybe PricewaterhouseCoopers. She's in the middle of really every issue affecting our industry. Involved heavily in pass-throughs and partnership tax issues. So, we're excited to have her with us. It's obviously been, Sarah, tough couple weeks for the country. And I know that you've got a lot going on Capitol Hill right now, so appreciate your time. And if I could, maybe I thought I'd just start by asking you a little bit about what it might be like these days, Senate life during the pandemic. I think, we're all obviously adjusting to this new world. I'd be interested in just your thoughts on how you and your colleagues are adjusting to the new working environment. Maybe you could talk about Senate Finance Committee offices. Are you all fully staffed now or just partially, or is everyone still kind of, working at home? Are you all doing hearings? And if so, what's that like? I seem to be seeing a lot of hearings that are televised and virtually held at this point. If you want to say anything about when you think the Senate's going to reopen, and maybe if you think any of these new practices are going to stick post virus, do you think that you think things have changed permanently up there? I'd be interested in any thoughts.
Sure. Yeah, definitely. It's definitely been a learning experience. Not the normal way working virtually that the Senate operates. Fortunately, we do now an improvement we've made on Finance Committee. We have more than one conference line, so that's a big improvement since April when we were eavesdropping on the tail end of everybody's calls by accident. But yes, it's office by office right now. Some Senate staff have been coming in more regularly, but Senator Wyden has still been operating with a skeletal staff. About 2 or 3 people will come in on a regular basis out of like 60 or 70 staff he has in DC. And he's adjusted really well, frankly. And then as far as hearings go, there's actually a Finance Committee hearing yesterday on unemployment insurance. And senators still have the option of attending hearings virtually. Senator Wyden went in person, along with maybe a quarter of the Finance Committee, and everybody else joined via video. Unclear if anything will be permanent, but I expect it's probably going to be a while before we're back on Capitol Hill meeting in regular capacity. If anybody that's been on the Hill knows that our offices are right on top of one another, so pretty difficult to socially distance. So I think it might be a while before we see everything return to normal.
Yeah, it's definitely tight up there. Well, I know Senator Wyden is very technologically savvy himself, so I'm sure he's has the office kind of running the same way there. So maybe we could talk a little bit about Congress. You took really bold steps in March and April, combat the economic effects of the COVID-19 pandemic. Unemployment, of course, still very high. Millions of businesses still really struggling out there, trying to avoid bankruptcy, stay afloat. Maybe you could talk a little bit about your thoughts on, broadly speaking, prospects for additional relief on the tax side, economic stimulus. What's your view on how things are looking going forward?
Yeah, so obviously the House signaled their interest in another stimulus package with the HEROES Act, and the White House has said publicly that they're interested in another stimulus package. Senator Wyden in particular has been pushing pretty hard. He thinks supplemental relief is needed, particularly for very small businesses that are really still struggling right now, despite efforts through the PPP and EIDL, for example. And then in addition, the pandemic unemployment program, it expires at the end of July, which is another reason Senator Wyden has been pushing for another stimulus package. Unclear in the Senate. We had been kind of hearing reports that Senator McConnell was expressing an interest in doing something before the July 4th recess. But then after the good jobs report last week, there's been kind of speculation that that might be instead maybe end of July, so immediately before the August recess. And still unclear what it looks like. We're still discussing everything at a staff level, but not sure. There's been a lot of push from the Republican side to keep, an additional stimulus package limited and not be, the capacity that CARES was a $2 trillion stimulus package. So we'll see, we'll see what it looks like. But I think the best intel I have is maybe sometime late July, but still unclear.
You mentioned the small businesses, but maybe you could talk a little bit more so assuming we have subsequent negotiations, COVID-19, another legislative package, the ranking members talking with Senate Republicans, talking with his colleagues in the House. What's kind of ranking member Wyden's tax priorities you think in the next stage of discussions?
Sure. Yeah. So immediately before the CARES Act, Ranking Member Wyden introduced a small business tax relief package. One of the provisions of which was an employee retention tax credit, which got picked up into the CARES Act in form. It was, we worked on that with our Republican counterparts on Finance Committee as well as Treasury. And so he's pushing for that to be reformed and improved. For example, with the retention credit, there's a pretty harsh double dip whereby PPP borrowers are unable to use the retention credit at all. And he's pushing pretty hard to make sure that, to the extent they exhaust their PPP funding, those businesses could avail themselves of the retention credit. He's also in favor, of lessening the gross receipts test because, in acknowledgement that, the first prong test requires a business to be required to be closed in order to use the retention credit. And as economies reopen, we acknowledge a lot less businesses are going to rely on that. It's also going to be harder to administer with all the states being in various stages of reopening. So thinking through, what an easier gross receipts test might look like, because a 50% drop is a pretty steep drop, and acknowledging that more businesses need help and we want to keep folks tied to an employer if at all possible. So he's pushing for that to be improved. And then in addition to that, the bill that he introduced prior to the CARES Act included a provision for small business tax rebates, kind of similar to the economic impact payments that were part of the CARES Act, but instead of going to individuals, going to businesses, very small businesses. The thought there being that even with PPP and EIDL and other small business relief programs, there are certain very small businesses out there that are least likely to have cash reserves and least likely to have existing relationships with borrowers. And just trying. Go ahead.
Can I ask you about that?
Sure.
What kind of flexibility does the recipient, are those strings attached to how those funds are used by the business? Or?
No, so is currently envisioned, the proposal is just included in taxable income to try to incentivize the small business owner to spend it on business expenses to reduce their taxable income, but no strings, and that's very intentional because the feedback we've gotten is we can't even envision the expenses that are coming at these businesses as they start to reopen. We talked to brewers in Oregon that have dumped months of supply because they've gone bad. And so, just unrestricted cash is what these folks need. And the importance being is we want to start at the very bottom of the chain, to prevent cascading effects up the chain. Today we don't want small business owner not to pay their, landlord not to pay their vendors and the like, and then that just creates problems all the way up the chain. And so that's kind of the thought behind that proposal. And he's still pushing for that proposal as part of the next package to be included.
Yeah, I really appreciate your comments on the double dipping issue too, with the PPP and the employee retention tax credit. We hear, a lot of real estate businesses, community shopping center, and that's in another entity. And if one of those businesses is able to get a PPP loan, then they're disqualified from using the employee retention credit in a different business because of common ownership, even though they may be totally separate businesses, different employees, and different economics and stuff. So that is a common issue that I know our members have confronted when they've debt trying to use these new tools the government's given them in the CARES Act in making them work in the context of their businesses. But maybe I could ask you a little bit about partnerships and pass-throughs, because I know that falls in your area. So there's about 4 million partnerships in the country. We've, based on recent IRS data, at least about half of those are real estate partnerships. So, we take a deep interest in any kind of changes in this area of taxation. We're really discussions on the Section 9A and the pass-through deduction. And I'm just curious, kind of looking out a little bit further on the horizon, partnership tax, are there areas that you think are really kind of ripe for getting interested in other business tax issues?
Sure. As far as future, changes in the pass-through space, I think a lot of that hinges a lot on 199 Cap A, which I know Real Estate Roundtable has an interest in, and no matter what happens in November, that provision in particular, it's set to expire with the rest of the individual title that was enacted with the 2017 law at the end of 2025. So, no matter what happens, it's going to be on the negotiating table and subject to reform. Senator Wyden hasn't been shy about his dissatisfaction with really kind of the regressivity of 199 Cap A, just that the vast majority of the cost goes to, the top income earners. And so that's something he's expressed concern with. That said, a lot of folks have said, especially on the Democratic side, have said, well, we should repeal 199 Cap A, but that's kind of a curious position to take because, as I'm sure you're aware, it's not just the millionaire households and above that avail themselves of 199 Cap A. There are, millions of very small businesses that also largely benefit from 199 Cap A. So it's definitely something we're looking at. And in addition to just like the economic characteristics of who's benefiting, it's also very complex. And we've expressed concerns with the specified services definition and how it kind of draws arbitrary lines between different industries, and thinking through, how can we make this a little less complex and make sure we're not, creating disincentives between different businesses that are trying to access the same third-party capital. And again, I should specify that, obviously any thought of extending, making permanent, or changing 199 Cap A isn't done in a vacuum. It was partly enacted to provide parity with the corporate rate drop. And so, any discussion about 199 Cap A has to consider, well, what's the corporate rate? What's the individual rate? But I think, 199 Cap A is definitely—
It was created for parity with corporate rates. That was the last thing I caught there, to provide greater parity with what was being done on the corporate tax side. Yeah.
Right. Yeah. So just, as we think through, any potential reform there, just noting that we'd also have to consider what's being done on the individual rates, what's being done with the corporate rate, and the like.
Well, I appreciate those comments. And, I just say, the roundtable, we never really look at these things statically. We're always looking at ways to improve them and make them better, reform, and also want to engage members like Senator Wyden, who have concerns with provisions and try to find ways to address his concerns and still kind of preserve the ways in which real estate's a contributor to the economy. So, we got a little bit of runway before getting to that point with a lot of TCGA expiration, and look, definitely look forward to working with you on that. So Sarah, shifting more specifically to real estate, one of the major tax issues we see in the current economic crisis is really derived and flowing from the disruption in rent and businesses, shops, restaurants, retailers' ability to really make meet their basic payments and that's affecting, obviously, the real estate owner, and that complicates their ability to do things like pay their lenders and provide for upkeep and the security and all the services that they provide. And then it flows further up the chain to the community that's receiving the property taxes that's affected. And so, we're really, very focused on this that begins really at the small business level, and appreciate hearing Senator Wyden's real focus on small businesses. But what we do also notice and see is that there is going to be, and we're quite confident of this, and we're already starting to see it in a lot of segments of real estate, particularly retail, but some others as well, is the need to really go back and restructure debts with their lenders to put them on a sound kind of place in terms of financial obligations. And that will allow them to avoid foreclosures, avoid bankruptcies, keep people employed. So really heavily focused on trying to take the tax code out of problems that are going to prevent kind of borrowers and lenders from on their own kind of resolving their challenges, their debt restructurings and workouts. I'm sure this came up in PPP, and it was a big kind of hot topic. There was a kind of a blanket forgiveness of debt for loans that are forgiven through the PPP program, and then there's this issue of whether the expenses are deductible with those as well. I just want to note that we're kind of seeing that on the private sector side as well, not just governmental loans, but private sector loans. And we think we want these parties to kind of come together and try and reach agreement there, and think that's good for the economy. I know it's I'm not sure if this is something that you or your colleagues have started to think about or look at. A lot was done during the financial crisis in this area. And just curious if you think there's kind of openness at the among the tax writers and finance committee and look in this area of kind of debt forgiveness and cancellation of indebtedness income.
Yeah, I'll say, so, you mentioned PPP, and I'll say briefly on that point, the PPP explicitly said the forgiven loan is not taxable income. And then IRS put out, their notice saying that, well, then the related expenses are not deductible. And I'll just say that Senator Wyden authored a letter with Chairman Grassley and Chairman Neal asking for Treasury to reverse that decision. They have not. And then in addition to that, Senator Wyden was the original co-sponsor in the Senate of the Cornyn bill that legislatively undoes that decision. So as far as that goes, allowing, the PPP borrowers to fully exclude from taxable income and not negating that exclusion by disallowing the deductions, he fully supports that. As far as, supplemental relief through changes to COD, I think there's general interest in helping businesses keep as much cash on hand, businesses and individuals, right now, so that they can pay their expenses, they can pay their employees, that, as you explained, the cascading effects don't happen. I suspect it wouldn't be anything permanent. I think if something made it into a next package, I assume it would be similar to CARES, whereby it would be a very targeted, temporary relief. And you mentioned like the Recovery Act, for example, I know had some COD changes to provide that temporary relief. So it's definitely something we're hearing about and that we're looking into. Senator Wyden particularly has maintained his focus on the very small businesses, as well as relief for individuals, the most vulnerable individuals, those that have lost their jobs due to the pandemic. So those are his primary focuses, but I definitely something we're thinking through and we're aware of, and that there's, like I said, broad interest on the Hill, I think, of trying to help businesses, get through this economic crisis and these closures. They're closed for no fault of their own. So interest in helping in whatever way possible, for sure.
I appreciate those comments. That's really helpful, and that's great perspective you're bringing to it. So thank you, and I'm sure we will have more conversations on that. Maybe I'll ask one more substantive question, and then just close up. But on substance, and I'm not sure if this issue has come across your desk or maybe the desk of your colleagues. But one thing we're seeing in the retail and senior housing industries Those are, two areas that are really particularly struggling. And we're hearing from shopping mall owners, shopping center owners, as well as the owners of kind of big healthcare, senior housing, assisted living REITs that are actually interested in taking on more of an interest in tenants to kind of give them I'd call it a lifeline to keep those businesses going. It's good for their business, and then it's good for the shopping center as a whole, or the owner as a whole, and kind of keeps the ecosystem healthy. And this is coming up in the area of REITs, which is why I said, I'm not sure if this would be you or one of your colleagues, but there's technical rules in the REIT area that make it very difficult for REITs to take an economic interest in their tenants, in their businesses. And so I know, like NAREIT and others, as well as ourselves, I've made this kind of a priority in the pandemic because we think it's a self-help mechanism. It's a way for industry to kind of be lending some help to these businesses, and tax, we think, shouldn't kind of stand in the way of that happening. So I don't know if you've looked at that area at all, or if it's something the committee is interested in. Probably does require some legislation. I'm not sure it can all be done regulatorily.
Yes, yeah, I have seen those proposals, and we're continuing to review them. I think I've come across two, one being an equity interest and the other being lending to the tenants, and flagging obviously that as everybody knows, the REIT rules were intended to provide for passive interest in real estate. So to the extent they start controlling their tenants, there's questions there, but definitely appreciate the need to provide a lifeline to their tenants, and because they have that existing relationship, maybe they're more able or more willing to lend or put money into their tenants than a third party may otherwise be. So definitely understand the issue and the desire there. It's a similar idea of what we've already discussed, that trying to start at the bottom to prevent those cascading effects up the chain, and something that Senator Wyden is trying to make sure doesn't provide for lasting effects on the economy by not helping those businesses. So reviewing that and thinking through what that would look like, and unclear if it would make its way into a stimulus package. Again, I think part of one of those proposals I think was more permanent, and again, I suspect that permanent changes might be less likely to make it in, but I don't know for sure, because I understand that the point of that permanent proposal is to provide immediate relief. But aware of those and appreciate the desire to help out struggling tenants, for sure.
Yeah, I appreciate that point on temporary nature. The way I tell people is, I think Congress is more interested in kind of stopping the bleeding and providing relief right now than it is in fundamental reform. So a lot of times, a lot of these proposals we need to be thinking about as temporary measures to help the economy, as opposed to necessarily permanent necessarily reforms. Well, you've been really generous with your time. I'll just close, if I could, Sarah, with a question that I like to ask, which is, are there ways, we obviously have a lot of communication with the Tax Writing Office and Senate Finance Committee and yourself and others, but if there are ways that we can be more helpful as an industry, we collect a lot of viewpoints. Our membership ranges from the owner, the developer, the lender, the manager of properties, and just always looking for ways that we can be useful so that you're able to do your job as effectively as possible. And if there's anything that comes to mind in ways that we can make a better contribution, I invite you to let us know. We certainly want to be as helpful as possible.
Yeah, definitely. I mean, just keep contacting us, giving us that, the anecdotal evidence, the data. It's important that we have the relationships, because we try our best to understand what's going on, but we don't have the folks on the ground like you do. So it helps us draft good policy. So thank you.
Okay. Well, I'll let you get back to your job, and thanks for your time. You've been, again, very generous with it, giving us some great comments to think about, and I'm sure we'll be following up soon. So it's good to talk to you. Thanks, Sarah.
Great. Thanks, Ryan.